Good morning, everybody. This is the live market open for Tuesday. It's May 10th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast. Doing the show as usual for FX Street. I hope everybody is doing great. We'll cover as usual the recent developments in markets, various charts and levels. We had some interesting developments in various currencies, and the next 24 hours. As always, your questions are more than welcome, and I'll be glad to answer them. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. I hope now you can see the screen in a better manner. What's going on in markets? Well, we had several developments. One clear feature that we're seeing is that the Japanese yen continues weakening. There are a few reasons for that. There is speculation about intervention. Perhaps there is also real intervention in markets. That's only, of course, my speculation, but there is talk from the Japanese authorities that they'll intervene if necessary. Now, the Japanese weakness of the Japanese yen stands out because it's not a risk-on atmosphere in which other currencies are making a lot of ground. It's not it's not going hand in hand with extreme dollar strength in other places. It looks like a very specific yen story. So yesterday I was talking to you about this line 107.65. 107.65, I'll remind those who didn't attend the show yesterday that we had it working very nicely as support at the beginning of April. Now, yesterday during the show in the morning, the pair hesitated just under this line. Eventually, it did make the break, okay? Eventually, we did break above 107.65, and we had an extension of this move this morning. So far, the high is 108.89. Okay, 108.88. Lots of eights there. Just under the 109 level. 109 provided some support for the pair. Not such a strong line like 107.65. Of course, much stronger resistance is at 110 because, well, that's a very round number. Okay, we don't have any evidence of real intervention, but it seems like this. If you want more details, to read about it, I wrote about it yesterday, 3 reasons why the yen, why this seems like a BOJ intervention. Okay, another thing that's going on in the markets. We talked about the fires in Alberta, in Canada, around the oil sand production. There is some progress by the authorities. They're beginning to get some control over it. Okay, we heard from Shell that they'll be resuming production at a low level. Good morning, Sirik. Good morning, everybody. So that's good news, well, for the environment, less fires, and also oil production is stabilizing over there, okay? So if this was one of the things that pushed oil prices higher, it isn't working anymore, because the bigger picture in oil is that there's just too much supply and not enough demand. Specifically for the Canadian dollar, even if oil prices are higher, but Canada itself cannot produce more oil, it isn't really good news. Anyway, we're seeing oil prices pressured. This is WTI crude oil. So this morning we are seeing some kind of a move to the upside, some kind of bounce. I still see this as a dead cat bounce. I see oil prices as pressure to the downside. Over the weekend, we heard from the Saudi authorities. They made there some significant reshuffling in the oil ministry, in the central bank, and it seems, according to analysts familiar with the Saudi royal house, it seems like they're trying to sell as much oil as possible because they don't think it really has a future. They don't think the world will move away. Okay, that's speculation again, but if in the past they were more in mood of, okay, let's change oil prices let's change production to manage relatively higher prices to get the best bang for the buck, it doesn't seem to be the case anymore. So that's also something going on in markets. Don't worry, we'll cover also euro dollar and all the other currencies. Just want to cover the sort of big headlines. Good morning, everybody. Other commodities are also under pressure. We had some buildup of commodity storage in China of iron and copper, and things are unwinding there. It sort of serves as another pressure on the Australian dollar. Okay, well, also now this morning we're seeing some kind of a bounce. We bounced a bit above, we bounced at the very round 73 number, okay? But I still see 70 to 80 as more significant support. Anyway, the range is lower. Even though we're seeing this bounce, we're at lower ground with the Australian dollar once again. I'll remind everybody, last week we had the RBA, the Reserve Bank of Australia, cutting rates. It wasn't fully expected, from 2% to 1.75. Just 2-3 days later, they had their updated forecasts and they slashed the inflation forecasts, raising speculation of further rate cuts. All in all, Aussie dollar reached the peak here of 78.40 towards sort of middle of April, and since then the trend has been clear to the downside with these reports about commodities. There is more pressure. Again, we're seeing some kind of a bounce this morning, but at the moment I suspect it's a dead cat bounce. It's not like the big change we've seen in the US dollar last week. Okay, we've seen the dollar fall deep down and then make a huge bounce. Okay, that turned around Tuesday when we've seen euro dollar, for instance, reach 116.16 and make all the way down. Question here from Jax: are the oil bigwigs greedy or just bad businessmen? I'm not sure they're bad businessmen. I think the oil bigwigs, well, some of them are bad businessmen, of course. The idea from that came out of Saudi Arabia since November of 2014 was the reason they saw the US shale industry producing too much oil, okay, and taking their market share, and they decided, okay, we can win you in this game. We can produce more and more, limit the market share, limit production in the United States, maintain their market share. On the way, it hurts Russia and their rivals with Russia in Syria, and hurts their arch rivals, Iran. Okay, so I'm not sure they're bad businessmen. Of course, there are consequences, because now Saudi Arabia cannot just throw money at its citizens to keep them quiet. They've raised some taxes. And now there's speculation also that they'll remove the peg of the Saudi riyal from the dollar. Anyway, some are bad businessmen. Some are good businessmen in the United States. For example, the US shale industry held up pretty well despite all the doom and gloom forecasts of bankruptcies and things like that. So, well, that's a long... I mean, like in every business, some people are more successful than others. Okay, so I think we covered the big headlines, and now let's continue with... okay, the Eurogroup. Okay, let's talk about it while we look at euro dollar. Euro dollar very much in range 113.85 this morning, a very limited range. Euro dollar is frustrating us once again. 25 pip range. 114.10 is weak resistance, support at 113.35, but we haven't reached that level. This is the turnaround Tuesday I was talking about yesterday, 116.16. Well, I was talking about also last week. Anyway, and then we had a big fall, and then the continuation of this fall. First of all, let's get up to date with the news this morning. Some figures out of Germany. So industrial output in Germany came out worse than expected. Okay, so it's a fall month over month of 1.3%, worse than 0.4. Doesn't have a lot of impact. Also year over year, it's a disappointing figure. We had, like in China, the trade balance, the surplus is better than expected. Okay, 23.6 billion euros, better than expected, but the underlying picture is a lower level of imports. Okay, so Germany is exporting its way to prosperity, but the lack of domestic demand is worrying, not only for Germany but for the whole continent. Okay, but we had bigger news yesterday. Again, not such a big impact on oil prices. We had the Eurogroup meeting in Brussels about Greece, of course. Greece, once again, things were dragging for a long time. Greece is running out of money. It needs to pay its creditors. It passed through Parliament after a heated discussion over the weekend. More cuts to pensions, more austerity measures. There were protests outside, a heated discussion in Parliament. They went to the Eurogroup. What were the decisions? The decisions were, they began to talk about the debt relief. Remember, the only thing that Tsipras, the Greek Prime Minister, achieved in last summer was that they'll begin talking about the debt after the first review. So there was a beginning of a talk about the debt. They discussed about talking the debt, about dealing with it in three levels: the short term, the medium term, and the long term. And everybody reported progress. Of course, the Greeks needed it to show that they're making progress, that they didn't sacrifice the pensions for nothing, that they did come back with achievements out of Brussels. The Eurogroup, they had also to make some kind of a nod to the IMF that, okay, because the IMF always said that the debt is not sustainable. And regarding, and Germany, in theory, they blinked. They began talking about the debt, and they didn't want any kind of debt relief. But as I see it, you can read a lot about the Eurogroup meetings yesterday and the decisions. Bottom line is they'll continue the discussions and to meet again in May 24th, basically kicking the can down the road. The idea is to keep Greece out of the headlines until the EU referendum in the UK. There's lots of anti-European Union sentiment all over Europe. We've seen the Austrian government fall, rising of the National Front in France, a second round of elections within 6 months here in Spain. Italy is lifting its head, challenging austerity policy. Also in Germany, the Alternative for Deutschland party is gaining ground. Opinion polls show that there's more and more discontent. The idea is that Brits will not see even more EU incompetence towards the June 23 vote. My guess, I don't think it's very wild, is that the next Eurogroup meeting on May 24th will result in more talks and more talks and more talks. And after the referendum, perhaps we'll get some decisions as well. Yeah, I see here some comments. Jack says, is the Eurogroup going to sell Greece to China? I don't think that was on the agenda, but you never know with these guys. We know that Chinese investors bought some assets in Greece, of course, for bargain prices. Good morning, Luca. Good morning, Linda. Good morning, everybody. Okay, let's go back to the charts. Enough with the Eurogroup. As I say many times, Greece is not moving markets at the moment. I heard some analysts comparing Greece to Puerto Rico. That was a tongue-in-cheek joke. I know, but you can never rule out anything. The Greeks were also in talks with the Russians last summer about some kind of aid that was angering Merkel, of course. So, yeah, you never know about these jokes. Maybe it can turn into reality with the Eurozone. Everything is possible. Anyway, I heard some analysts comparing Greece to Puerto Rico. It has a lot of debt, but it doesn't threaten the United States. Same thing with Greece and the Eurozone. I don't think it's not a threat. I think nothing was ever resolved, and things can, things can blow up any moment. Anyway, euro dollar to back to the charts. 113.35 support, 112.50 further support resistance, 114.10 more important resistance at 114.60. Pound dollar. I was talking about the EU referendum. Everything is related. The pound remains under pressure. Yesterday we had a speech by David Cameron talking about the importance of the European Union for peace in Europe, for peace in the world. I think it makes sense because the European Union also supports peace I mean, that's one of the things that brought the continent back together after World War II. So his speech did make some sense, of course, but of course he was criticized for, again, scaremongering with wars, just as an argument for his debate. Anyway, the campaign in the UK is at full speed. Opinion polls continue showing an undecided, a sort of mixed picture. Okay, again, the conventional wisdom is that Brits will, the undecideds will remain with the devil they know, the EU, that there will be a small majority for staying in. But opinion polls can be wrong, and anything is possible. Currently 144.25, support at 143.70, resistance 144.40. Also here we're seeing a small bounce. The big level on the downside is 140.50. High resistance here 145.80. That's where the pair traded above just before the US dollar began its recovery path. Okay, we talked about dollar yen, dollar CAD. We had a move yesterday above 130. That was a fake out. Okay, that did not last too long. It was a stop hunting. We're back to the previous range, 129.30 to 130. Should mention levels above and below. So I would note 130.80 on the top side and 128.30 on the downside. So currently oil prices are falling, and Canada is not in full production. So regarding oil, Canada is in the worst possible position. And also remember, the US dollar is still trending higher since last Tuesday. We had, we are also in the Canadian dollar, we had dollar CAD dipping under 125. But since then, like with many other currencies, dollar CAD is moving higher. Aussie dollar, we talked about that as well. The range is 72.80 to 73.75. Currently rebounding. Kiwi dollar, we've seen the Kiwi dollar again holding for some time, battling 68.20. Yesterday it fell because, well, last week the RBA cut interest rates and hinted about more cuts, and speculation is rife that the RBA instead will follow suit. We have the stability report coming, and the speech by Graham Wheeler that will be an opportunity to hint about further monetary policy. Anyway, currently we're at 67.58. 67 is support, 68.20 works as resistance. Falling commodity prices, speculation about cuts, and of course worries about China. Again, over the weekend we had articles talking about China's debt. It's not new. It's not the Chinese public debt, but the private debt. But when The Economist makes an article about it, research about it, and other analysts talk about this ongoing danger, then it also weighs just a bit. Dollar Swiss franc settling here above just above 97. 98 works very nicely as a resistance. 96.40 as support. We have seen Euro Swiss move higher. That's the pair that the Swiss authorities care about most. Currently 110.57 resistance. Well, I would say just at 111 or under 111. Support at 110. The pair trades in a very narrow range. Those that come often to the show know that I'm not a big fan of the Swiss franc because of the ongoing intervention. But perhaps if you're looking only at technicals, perhaps you can identify some nice patterns on dollar Swiss, which is a mirror image of euro dollar, but not exactly. So perhaps it has a better technical behavior. Anyway, I fear intervention and not a big fan. Euro pound. Euro pound working nicely, trading nicely under the 79.30 level. Currently just under 79. Support is at 78.30, but also here the range has become a bit more narrow. 80.30 is high resistance, followed by 81.20. Support 78.30 and 77.40, which is quite a veteran line. Euro yen. Euro yen is reflecting the weakness of the yen seen across the board against the dollar and against the euro and against the pound even. So currently just under 124. 124.20 is the level that I see as resistance, followed by 125. Support 123 and very strong support at 121.65. Okay. And the dragon, one of your favorites, moving higher as well. It's clearly the weakness of the yen more than the pound, of course. 157 is the current level. We broke above 156.60. The next level of resistance is 158.50, followed by 160 and 162.50. Support now at 156.60, followed by 155.80. Okay. Also in pound yen, we're seeing a bit more choppiness than we used to see. Okay, so that's the roundup of currency charts for this morning. Yeah, and of course, any questions about any chart, everything is welcome. All right. This is a chart that did not function yesterday. That's the probability of a rate hike in the United States. Still very low for June, just under 10% chance for rate hike. There's been speculation following the rise in wages and some comments by members of the FOMC that we might see a rate hike. I don't see that coming. Also, bond markets don't see that coming. Brexit is one good excuse. Okay. Reversal Tuesday shaping in up for dollar. Okay. After last Tuesday, we had positive reversal for the dollar. Perhaps we have a negative one. It doesn't seem so, at least not now. Perhaps later on, but at least now I see some kind of profit taking. Okay, for instance, euro dollar is marginally higher. Pound dollar is marginally higher. Well, maybe now it's the beginning. Now it's a bit of a sharper move in pound dollar. I don't see that. So I don't see a rate hike, but I don't see the US dollar for me still the cleanest shirt in the dirty pile. People may start realizing NFP was a nail in the coffin for June hikes. Yeah, I don't think it was a nail in the coffin. I think chances were low anyway, and this didn't provide enough fuel for raising speculation. Let's remind everybody the non-farm payrolls on Friday was weak on the headline, a gain of 160,000 jobs, but wages looked good, 0.3 month over month, 2.5 year over year. The market reacted first by taking profits on the rise of the US dollar that began 3 days beforehand. But when the dust settled, the trend resumed. The US dollar strengthened once again. Of course, wages were cited. If you want to put on the rosy glasses, you can say, well, the US is getting closer to full employment. And if it's getting closer to full employment, the level of job gains is becoming slower, and there's more pressure on wages. Okay, I don't see it this way. I see it, okay, sometimes it's a bit higher, sometimes it's a bit lower. The US economy continues growing just very, very slowly. Same for jobs, same for wages. Okay. Does the market expect oil just just hate dollar weakness? I don't know what they hate or love, but there's so much trouble in Europe, trouble in China. The yen wants, the Bank of Japan wants a weaker yen. The US is more steady, okay? At the moment, again, there were long weeks of dollar weakness when the market loved dollar weakness. So I think its moods are shifting all the time. What's the reason for the Japanese weakness across the board? Yeah, I think the Japanese weakness across the board is a combination of a few things. First of all, threats of intervention by the Bank of Japan. Maybe they already have intervened. Okay, we talked about this, that it's harder to cut. It's hard to catch a falling knife. It's hard for the Bank of Japan to reverse the trend of a stronger yen. It's hard for the Bank of Japan, especially after a few failures to do that in recent months. They would rather go with the flow. Once things have stabilized, in this case, once the US dollar began turning around, maybe they gave dollar yen another push to the upside. Okay, that's my speculation. I have absolutely no proof of that. They did talk about intervening, but they talk about this all the time. And those are the main reasons, because it cannot be a risk off. I mean, I don't see it as a risk on sentiment, because also the Australian dollar weakened with the yen yesterday, also the kiwi dollar. Okay, so it's not your typical risk on sentiment where the yen weakens but commodity currencies rise. It's also not very particular dollar strength. I mean, the dollar was stronger, especially against commodity currencies, but it was much, much stronger against the yen. I suspect there's either at least fear of intervention, perhaps real intervention behind that. Do you think the RBNZ is going to hit the kiwi tonight following on from the RBA? Yes, I do. They would like, and I think it's already partially priced in. Okay, we've already began seeing the kiwi weaken against the US dollar, and perhaps also against the Aussie dollar. Let me look at that chart. But yes, I think markets are waiting for the hammer to fall, and I think it will fall. I think it's not fully priced in, so we might see further weakness in the Kiwi dollar. Let me look at, we're talking about a competition, right, between rivalry between the Australians and the Kiwis. So yeah, so we've seen this is what we've seen last week, the weakness of the Australian dollar across the board, also against the Kiwi dollar, which was quite resilient. But now the tide has turned here. The Aussie dollar is strengthening against the Kiwi dollar. 107.50 was sort of the low line over there. Yeah, this is a more relevant line here. Some support at 108.10. So 110.50 is a strong line to the upside on Aussie Kiwi, and perhaps we could get closer to that level. I believe that they'll that they'll send a message that the economy is not doing so well, that they could ease monetary policy, that financial stability perhaps is in danger, or things like that. Okay? Okay, so answered a few questions. That's the mood, things that happened yesterday. Some figures, really not important ones. Centix investor sentiment in Europe was 6.2 as expected. The Fed labor index was totally ignored by the markets at minus 0.9. Chinese CPI came out as expected, 2.3. At least the PPI, which was on much weaker ground, continues to recover, but it's still, negative year over year, a drop of 3.4. Okay, very light day in terms of indicators yesterday, but relatively busy with political developments. Okay, so today on the agenda we have the German industrial output that, as we already talked about that, it came out below expectations, a drop of 1.3 year over year. At least the trade balance came out better than expected, but again, the drop in imports is not good news regarding domestic demand. At 8:30 GMT, we have... Oh, I wasn't aware of that. Okay, we had a speech by Bill Dudley. Let's see if I can get some headlines for you on that. But Dudley is a dovish member of the Federal Reserve. He says that the US dollar should remain key reserve currency if the US keeps its house in order. Okay, nothing new. US would not necessarily lose if USD alternatives became reserve currencies. Okay, it seems to be not related to monetary policy, not a market mover, by Bill Dudley, number 3 at the Federal Reserve. Yeah, what I wanted to talk about is I think sort of the big event for the morning, also could be used by both sides in the Brexit debate. UK trade balance released at 8:30 GMT, 9:30 in the UK, 10:30 where I'm sitting here in Barcelona, Central European time. We had growing deficits in the trade balance in the UK. Okay, now the goods trade balance is expected to squeeze just a bit from nearly 12 billion pounds to closer to 11 billion. Okay, many economists in the UK were worried by the ballooning trade deficit, seeing it as a bad sign for the economy in general. So a bigger deficit could hit the pound. I would say it's a second tier indicator, not a first tier one. But as we don't have too many indicators this week, this could have a relatively bigger impact than usual. Comment here by Luca, dollar index. We are at a natural place where the downtrend may resume. Okay, so thanks for sharing the chart. Let me share it with everybody else here. Very nice. You've been sharing this chart, these trend lines, this channel to the downside for several times, and I'm glad to see that, well, the channel holds quite well in both directions, up or down. So if the line holds, now we're at the top of the channel on the US dollar index, and we could see a fall from here. Yeah, because we had a big recovery last week. That's the turnaround Tuesday I was talking about, charted here by Luca. Thank you very much. Big bounce from the downside, a third touch of that downside downtrend support, and the pair is now close to resistance, weakening just a bit on the day under the, is that a moving average there, the red line? Anyway, yeah, quite a nice chart by Luca. Thank you very much. So yeah, if you focus only on the dollar index, which consists of mostly euro, and focus on technical analysis, this signals a turnaround, another turnaround Tuesday perhaps for the US dollar to the downside, but we'll have to wait and see. Okay, so thanks, Luca. My suspicion is that we will not see further weakness. In the US dollar, it's just a small profit taking, but not a big reversal like we've seen in favor of the dollar last week, but you never know. It's a full day. In terms of indicators, as I said, we don't have too much going on. Also today we have more. Every day we have just a bit more, but today's only Tuesday, only the beginning, still closer to the beginning of the week. We have the US jobs report, job openings at 2 GMT. It's a figure for the month of March, but it's important for the Federal Reserve. So if it's a big shock, it could be positive or negative. It could have an impact. But if it's around expectations, or a wide area around expectations, it shouldn't have a lot of impact. And we already mentioned the New Zealand Financial Stability Report. It's published by the RBNZ, Reserve Bank of New Zealand. It's published only twice a year. Of course, the big main focus is financial stability, but it's also an opportunity to talk about inflation, growth, rate hike expectations, etc. Specifically, when there's also a press conference, let me get the exact time of the press conference for you. So Governor Graham Wheeler in New Zealand will speak at 11 here. That's 9 GMT. That's immediately with the release of the report. And I think he also has another public appearance. No, can't see that. Okay. But his public appearance can last on and on, and these are hours of very thin liquidity. So any comment he releases in answer to a question in the press conference can have a significant impact on markets. Okay. For already looking at things for the night, investment lending for homes in Australia and home loans, not that important figures, but the Australian dollar is relatively sensitive, and we could have some kind of movement from here. Okay, so home loans, yeah, and also foreign direct investment in China. We don't have a specified hour. That could also have some impact, but yeah. Anyway, the big event, I think the bigger event for the morning is the UK trade balance, and of course political news from the UK, also political news from the United States. Yesterday we had Donald Trump, the so-called presumptive Republican candidate nominee. Well, everybody's out. He's the nominee. He said that the United States should get a better deal on its debt with China and perhaps default on some of the debt. Markets have ignored this because Donald Trump says a lot of things. Mr. Trump talks a lot of nonsense, but anyway, if he repeats it again and again towards the elections, and there is also a chance that he'll be elected, then it'll be quite rattling for markets. I mean, he might not go through with such a program as president. He might not have the authority. He might not be elected. But just repeating this message is not something markets want to hear. The United States is not Greece. The United States is not a small company. It's not one of Trump's casinos in Atlantic City. People would not want to see the United States default on its debt, the biggest debt pile in the world, in terms of total debt, not in terms of debt to GDP. Of course, Japan has a bigger debt to GDP ratio. Anyway, and campaign is going on. The United States, the election cycle is quite long. Another political development we had yesterday, Austrian government, Austrian chancellor, he quit basically on his party's center-left party's failure to move to the second round of the presidential elections. Also, the center-right party failed. It's basically the left Greens against the extreme right Freedom Party. In Spain, towards the elections on June 26th, just 3 days after the referendum in the UK, there are elections, and there's an alliance of left-wing parties. This could complicate the picture just a bit. What else? Yeah. Anyway, as you can see, a lack of economic indicators means more talk about politics. But let's go back to the charts. See if anything interesting is going on. No, euro dollar at the same old. Remember, there are also lots of other currency pairs. For instance, the major dollar yen ticking a bit higher as we speak. I talked about 108.88. We're a bit above that line. Let's see if we manage to break above 109. Yen weakness is a big story this week. And the Aussie dollar falling from grace, currently on a recovery path, but not going anywhere fast. Okay, any more questions? Let me talk about other events this week to show that there are more interesting indicators on the road. We talked about, these things. Tomorrow we have the crude oil inventories. If they show yet another buildup in oil inventories, it could find oil prices in a sensitive point, and it could push oil prices even lower. On Thursday, a big focus on the Bank of England, dubbed Super Thursday, because it's the rate decision, the meeting minutes, and the quarterly inflation report. Let's see if they will express worries about Brexit, or talking about the impact that the fear of Brexit already has on the UK economy, how it moves markets. That could weigh on the pound. And on Friday, it's really busy. German GDP, and the focus on the US consumer retail sales, consumer sentiment, and also PPI. Okay. And to answer the question that will be coming from Jax, the currencies I'm focusing on today, not the euro, okay? I would look at kiwi dollar because it had a late reaction to the RBA finally falling, and now we have the financial stability report. I know it's not everybody's most popular currency pair, but now it's in the focus. And also the pound, the pound especially in the morning. Remember, with the UK figures, we tend to see some kind of front running, some kind of price action before the publication. That means between 8 to 8:30 GMT. And then sometimes it's a buy the rumor, sell the fact. So if we'll see the pound rising, and then we'll have a better than expected trade balance release, we might see the pound selling off, just because this was already priced in. Buy the rumor, sell the fact, and take profit. That's something that is very common with cable. Okay. Yeah, we're getting closer to the wrap up for today. Okay, this is the wrap up for the live market open for Tuesday, May 10th. We've seen yen weakness as one of the biggest features in markets this week. Speculation and intervention, perhaps also real intervention after the tide has turned in favor of the US dollar. They're taking advantage of this. Positive mood in Asian markets is, of course, going hand in hand with yen weakness, higher Nikkei, higher dollar yen. Okay, in other commodities, it's relatively, well, not so good. Canadian oil production stabilizes. We've heard from Shell that they'll be resuming production at low levels. Authorities in Canada and Alberta have managed to stabilize the situation. Fires are still going on, but it seems that the worst, at least, is behind us, at least in terms of what's going on in production. And elsewhere, there's just too much oil. Oil prices are lower, other commodity prices are lower, and commodity currencies are feeling the heat. In Europe, we had some happy, smiling faces about beginning to talk about the debt and getting closer to an agreement. I see this as a kick the can down the road exercise. Remember that the ministers of the Eurozone have their eyes open for what's going on in the UK, the EU referendum, another debate which is also heating up, speeches by various people on the campaign trail. Prime Minister David Cameron was speaking yesterday, talking about the importance of the EU for peace. He was, of course, criticized for that, for scaremongering, warmongering. And there's a debate about access to single market. Anyway, the campaign is in full swing. Opinion polls are still mixed. Okay, other figures we had yesterday were quite minor, at least from China. We did not have further disappointments after the weak trade balance figures. Things were actually okay. The charts, if we begin from the top, from euro-dollar, little movement here. Lots of frustration in euro-dollar, very narrow range. The hopeful range is 113.35 to 114.10. 114.60 is much stronger resistance, followed by 115. But so far, we're sort of waiting for the next big move in euro-dollar. Pound dollar is generally under pressure, trying to make a recovery. We might see lots of action later this morning with the UK trade balance. The trade balance in the UK has been negative, has been worse than expected in quite a few months. Now it's expected to improve, a squeeze in the trade balance deficit. Let's wait and see if how things are going. 144.23 is the current level. 144.40 resistance, followed by 145.10, support at 143.70. Dollar yen, as I said, the big story, getting closer, just missing 6 pips to reach the round 109 level, which is resistance, even stronger resistance at 110. Support awaits at 107.65, followed by 106.10. Speculation of intervention is weighing. Okay. Dollar CAD feeling the lower oil prices and lower production in Canada. At the moment, we're seeing some bounce back. 129.30 is support, 130 is resistance, followed by 130.80. Further support, 128.30. The Australian dollar, 73.40. The range is 72.80 to 73.75. We reached the round number of 73 so far. Commodity prices are lower. Again, we're seeing some kind of a bounce this morning, but I still see the trend is going against the Aussie. The Kiwi dollar did lots of catch up with the Australian dollar on speculation that the RBNZ will follow the RBA, that also New Zealand will get rate cuts. Yeah, and the focus, events we have today are, we had already the German industrial output, which missed expectations. UK trade balance expected to show an improvement. Watch out for the sensitive pound. The US job openings report is important for the Fed, but we've seen it move markets less and less in recent months. Watch out not only for the level of job openings, but for the level of quits as an indicator for confidence, okay? More quits, more people quitting their job, more confidence, but again, it's not such a big market mover. Perhaps the biggest market mover is at night. The financial stability report from New Zealand with an accompanying press conference. The RBNZ, Graham Wheeler might hit the kiwi on the head, hit the kiwi when it's down, with hinting about rate cuts. Okay, so that's basically the wrap up for today. I see we have a few questions. We had, does the Bank of England prefer a stronger weak pound? We've seen that the level of the exchange rate, they prefer a weaker pound in order to see inflation higher, but the impact of the exchange rate on inflation, on the economy, has not been so strong in the UK as in other countries. So I would not, it's not that important. But of course, the pound moves by the economic situation, by the speculation of Brexit, and by the speculation of a change in interest rates. I mean, of course, all central banks probably would like to see, at the moment, weaker exchange rates in order to see higher inflation and more attractive exports, but there are countries where it's more important and countries where it's less important. In the UK, it's less important. Yeah, it's like summer trading come early for the euro. Yeah, it came early, but I think it's going to be a hot summer anyway. With the euro, we had long periods like this, and then things tended to blow up, especially with all the political issues going on and speculation about more action by the ECB. Lucas says on my watch list for the RBNZ, kiwi yen below 72.75, nothing to stop it until 70. Yeah, let's share your chart before we go with everybody else. Yeah, here we are. Yeah, it seems to be clinging onto support right now. Quite a battle with support, very stubborn support line. Also worked as support beforehand on kiwi yen. So yeah, if the RBNZ hits it hard, there's lots of scope to the downside. Okay, so that's a nice chart as well. We'll be looking tomorrow at the impact of the New Zealand dollar on Kiwi dollar and also on Kiwi yen. Okay, so yeah, so thank you very much everybody for coming. I wish everybody a safe and successful day at the markets. And as always, we'll be here tomorrow. So that's it. Thank you and bye-bye.